Wow, Jerome Powell just spoke and he sounded very dovish, which is really good for markets. It sounds like they're going to cut rates. I want to go through this along with what Larry Fink said too. He was grinning from ear to ear. You can see it right here, a still picture of it, talking about Bitcoin. We'll also be going through a couple of the assets that he thinks are really valuable right now. We'll be talking about the AI bubble too. He goes through tokenization, which directly affects crypto. And at the end of the video, I had forgotten this when I filmed this the first time. There was some big news about the US acquiring a lot more Bitcoin today. They acquired a lot more. So we'll talk about that. This is going in the strategic reserve. There's a lot to cover. We also have news that the short investor, the one that timed the market perfectly on Friday, who has been shorting over the last day, apparently closed his short just now. So let's go through all this. If you don't mind though, hit subscribe so you can see future videos just like this. Also, if you want to trade crypto, right? If you want to long the market, you think things are clearing up, you notice that we saw a slightly higher low over the last few days. If you want to start trading, check out BYDeFi underneath the video. They have a double bonus going on right now, which most exchanges don't even run bonuses. Like for ongoing clients, most of them just give out new bonuses and then hope that you keep on trading. At BYDeFi, they continuously give more money to clients or to people that use their platform. So right now you can trade and get up to a $13,000 bonus. Someone just got this literally like a week ago, and now they have the ability to get this again. Someone in our community got $13,000. There were a bunch of people that got like 170, some that got 430. So the more you trade, the more you get. If you want to check this out, right now for the first time, they're doubling up that and a deposit bonus as well. You can get up to $3,000 in deposit bonuses too. So let's go through the market. Now, we'll start with where the market's at right now. The NASDAQ opened up negative 2%. Now, barely red. S&P 500 went minus 1.5%. Now it's actually a quarter point green. A lot of this is due to Jerome Powell. And keep in mind, the bank earnings were this morning. They crushed it. As I said in the last video, that's kind of an indicator that the economy is doing fairly well. Fed Chair Jerome Powell says that economic growth before the government shutdown may be better than expected. Keep in mind, Q2 we grew at 3.8% GDP. So I'm wondering how good the economic growth was before the shutdown, right? We're in Q4 now, right? So how did Q3 end up? I guess we'll know here soon, but we do have company earnings coming out here very soon as well. So Jerome Powell may be looking at the total of of some of the economic data that they have and pointing out that we could see pretty good earnings growth, good GDP growth. Inflation sounds like it's coming down as well. Jerome Powell is warming up the money printer, saying that they may stop shrinking the balance sheet in the months ahead. That'd be extremely bullish. So even though they're cutting rates, they are still shrinking the balance sheet, which negatively affects markets. That's right now, but it sounds like they're not going to do that for much longer. Fed Chair Jerome Powell said that the Fed remains on track for more rate cuts as labor markets risk outweigh tariff-driven inflation. And Powell said, like I said, better growth than expected. So right now, Jerome Powell speaking very dovishly, very positive for markets. The markets really jumped up a lot when he was speaking. Very bullish news. Besant said 100% China tariffs don't have to happen. Greer said scheduled time for Trump and Xi meeting. Powell, very bullish, very dovish. And the Bitcoin insider whale closed their short position. So, we could see, a bit of a jump in the market. Obviously, we've seen a jump since this morning when Bitcoin went under 110,000. Now it's at 113. We're going to see some volatility, to be clear. We're going to see some shakeouts, I'm sure, even from last Friday, but especially with a lot of economic data being pushed back and with the government shutdown, there's just a little extra volatility in the market. So you have to be ready for that and be ready to ride the wave so you can make really good money in times like this where there's uncertainty, because I mean, even if you just bought Bitcoin at $103,000, right? You didn't time it perfectly, you didn't use any leverage, you'd still be up 10% in like 3 or 4 days, which is just nuts. With that said, we just heard Larry Fink talk on CNBC. They had earnings this morning, and he was grinning from ear to ear, talking about crypto, talking about tokenization, talking about some opportunities, some stocks that he thinks will do well, which is kind of odd that he points out specific companies. But I want to play this for you. There are 2 different videos. But just wrapping up that about Jerome Powell, a rising tide lifts all boats. The Fed, speaking dovishly like this, is extremely good for risk-on assets. So just take away that, if nothing else. Let's play what Larry Fink just said.
Now with passive, active, publics, privates, and then we overlay investment technology, and now digital, we're the firm that more and more people are going to worldwide.
What do you mean by digital?
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities, to bonds, across the board.
So while they're clanking around there, BlackRock and the NASDAQ and a variety of other companies have talked about tokenization. The SEC has talked about tokenization of equities as well. So they are definitely interested in this, and this has direct ties to crypto. But let's continue with what he says here.
It's
very loud here. Very loud. But it's good. Capital's at work. You like that.
I love capital at work.
Yeah.
But there's $4.1 trillion of money in sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize an ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years, as we start focusing, moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. They can have their cash, and we have the largest cash money market fund that's tokenized called BITL. Our Bitcoin IBIT is now over $100 billion.
$100 billion, I know, from not that long ago.
And 2 years ago, zero.
Yeah.
So,
well, you weren't always a huge proponent of crypto, as we know.
I love it now. But I grow and learn.
I heard you say that on 60 Minutes.
I did say that.
Jim?
Yeah, Larry, I wrote How to Make Money in Any Market. A lot because of our talks. Yes, a lot because of what you did. And I dedicate a lot of it to you, because I say that people don't know how to invest. People feel that their parents are going to be richer than they ever were. Do you feel that your offerings, if people were to embrace them and work at a company that had this, we could kind of change this world where younger people will spend more money on Polymarket, betting about whether on some political event, when if they go with what you have, they might be able to, through savings, be better and be wealthier than their parents.
So a great statistic, if you put money to work on January 1st, 2000, and a year later you had the dot-com crisis, 6-7 years later you had the financial crisis, you had the COVID crisis, you still would have made 8% compounded over that entire 25 years versus earning 1%. It is so compelling to be in the market, and this is the story. It's not about if our market's going up or down. Is there a bubble in crypto, or is there a bubble in technology? It's about being in the market throughout the cycle. Even if you put money in the United States in the year 1900, and then you had the Great Recession, you had the Depression, you had all these things, you would have earned over 9% over 125 years. So.
Now, we'll get on to the next video here in a second that he talks about like specific stocks and the AI bubble and stuff. But there was a really interesting article I read years ago. I know some people have gotten annoyed when I bring it up because of the title. Even God can't outperform the market is what it was called. And basically it looked at this perfect trader. where they invest all their capital every time that there's like a 20% drop or something in the market. They time it perfectly to the very bottom. Like they put all their money at the very bottom of a dip, then save until the next big dip, and then put all their money into that dip, and then they continue to do that. And even they weren't able to perform some that just dollar cost averages because they miss out on all the time after the dip, right? They time it perfectly, but then they store up cash, and that might be 5-6 years before the next big dip happens. So that was a really interesting article, and I get that some people don't like the title, but I didn't come up with it, so just calm on that front. But it is really interesting to look at that. Larry Fink's right. If you just continue to dollar cost average in the market over a long period of time, you do really well, whether it's the traditional markets, whether it's real estate, whether it's gold, whether it's Bitcoin, you've done really well. Now, he goes on to talk a little bit more about the AI bubble, but why we need to invest a lot, and then what companies he likes right now. And then there's still other news that we have to cover outside of this.
Yep. I did want to just get your take on the broader AI picture. I mean, the amount of money that is being committed by OpenAI, for example, is what we've been talking about, to companies, and just the enormity of this capital. I don't know if you've ever seen anything like it in your career, and I'm curious as to how you view it and whether you think that those who use the word bubble are correct in that usage.
Well, there's a bubble in investing, but are we inferring a bubble means a bad thing? But there is certainly a skyrocketing amount of capital that's being put to work. If you put it in a framework of geopolitical positioning, we as a country need these investments if we're going to be the leader in AI technology. So as an American, I'm pretty happy that we're investing this much money. I want us to be first. So let's start there. Does that mean, is there going to be some failures within the confines of these investments? Absolutely. But I do believe we are going to have to invest these huge sums of money. If you think about it, investing in AI does not just mean investing in GPUs and chips. It means investing in HVAC and investing in power grids and power supplies. It means employing a lot of people, too, to build this out. So we are talking $1.5 trillion, we estimate, just on data centers and power and all that. But if you see the rapid need in advance, I could say at BlackRock, the amount of information that we are trying to generate ourselves and the speed in which we want to generate, we're spending more and more on it, and we're getting good results on it. I believe every major company is going to have to be spending more and more on this. I think some of the investments that we've seen so far is not on AI, it's more on cloud and the power of the cloud. So I do believe I don't believe this is a bubble, but I believe this is capital that in most cases is going to be well spent. That being said, will there be one or two failures in that? Absolutely. And that is capitalism. We're going to have some big winners and we're going to have some big losers. And obviously we have to, but if you have a diversified portfolio, you're going to be fine and all that. Yeah. And if you're a stock picker, you better be picking the right ones. I'm pretty constructive on our big hyperscalers, though. And I do believe the Metas, the Alphabets, the Microsofts are in really good position to be winners. And you're seeing the transformation out of Oracle, what they're doing, and how Larry is trying to transform it. Broadcom, what Hoxton is trying to do. I actually am proud of the U.S. footprint in this, and I do believe we're going to need to spend this money to win on a geopolitical basis.
I don't want to give Jim the last.
Now, two of those companies are companies I literally bought, that I've bought over the last couple months, right? One I bought just Friday. I'd throw Amazon in that list too, right? He points out Meta, Google, and Microsoft, but obviously Amazon's a huge AI company too. They have the biggest cloud business and might re-accelerate here very soon. But it's interesting to hear him pointing out specific hyperscalers that he thinks will do well, right? I think he said that he's constructive on. But yeah, I'd say this is very positive. Obviously, there are a lot of companies, especially in the Mag 7, that are investing tens of billions of dollars a year into infrastructure and AI. I don't think everyone's got it wrong. And at the end of the day, these companies could turn it off if they really wanted to, and they could pay out dividends, they could buy back shares. There are other ways that they could put their capital to work, but they haven't even started to see, I think, the majority of the profits that they're going to get from reinvesting in AI. So at the end of the day, too, we need, for Bitcoin to do well, we need AI spend to continue, because that's a big narrative in the market. We need the Fed to continue to lower rates. We don't need that, I suppose, but that definitely helps the price accelerate upward. A loosening of market conditions, money printer turns back on. We also need a strong economy, and we need the likes of Larry Fink and other large investors to continue to be bullish and try to get more investors in. And right now we're getting all those things at one time. So this dip last week might have been just temporary, which is what we talked about on the channel. Right? This is due to manipulation into people trying to fear you out of your investments, trying to liquidate long positions. The first thing I told my wife when this was happening, or the first thing my wife asked me after I told her this was happening, she asked if we bought the dip, which we traded the dip and made a good amount there. But yeah, Larry Fink obviously very happy with how IBIT's done. He points out there that's over 100 billion in assets. He's grinning ear to ear, and this is their most profitable ETF now by a good margin. He also said that we're just at the beginning of tokenization of all assets. Obviously, that has direct implications on crypto and the usage. Now, I don't even know if I mentioned this at the beginning of the video, but this is pretty big news today. 127,000 Bitcoin has been seized by the Department of Justice. This is 0.6% of the total Bitcoin supply. That's huge. I mean, this should go right into the strategic Bitcoin reserve. In the past, they would have sold this off maybe a year or two later. But with everything that they've told us, this just took selling pressure off the market. This should be 127,271 Bitcoin that's locked up forever. This took away 127,271 whole coiners. At the end of the day, it's very hard to get to a full Bitcoin, and it's going to be harder and harder as countries like the US continue to stack up Bitcoin, even if it's just irregular, right? They haven't done they haven't done any purchases right now, and it's not like they've had a massive seizure of Bitcoin like this in a while. It's interesting too, because this is from the global pig butchering scam. I remember hearing about this maybe a year or two ago. It eludes me what they even did, what the scam was, but it is interesting to hear that this is where they're getting the money. And this is years after I think it kind of peaked, where people were talking about it. Let me know all your thoughts on this underneath the video. We are seeing a bit of volatility even now, just as the market's closing. We're seeing Bitcoin wick up and down $1,000 or so within a few minutes. So if you do want to trade, like I've said in the past, you can check out BYDeFi. I think it's really smart to have multiple exchanges, just in case one goes down to volatility. So sign up for BYDeFi, sign up for WEEX, BITUNIX, BLOFIN, BTCC. There are links underneath the video. Of course, as I said, I only do this with a small portion of my portfolio because it can be risky, but you can also get really good returns if you do this properly and don't get too greedy, which we've been able to make life-changing amounts of this cycle through leverage trading. But make sure you know what you're doing. Thank you so much. If you want to join the Telegram, it's completely free underneath the video, and I'll see you in the next one.